warm welcome to the Mutual Fund Guide. It's all about your funds and your returns. I am Muralidhar Swaminathan. Joining me on the show today is Harshvardhan Roongta. Harshvardhan, thanks so much for joining us. Let's go straight to the first caller. Prakash Baipune is on the line from Mumbai. Good afternoon, Prakash. What's your query?
Good afternoon, sir.
Good afternoon. Yes, continue.
I am a retired person.
Yeah.
And from last 10 months, I am investing in mutual fund.
Mm-hmm.
Hello.
Yeah, tell me, we can hear you.
For each mutual fund, I am investing in 4 mutual funds.
Okay.
25,000 each.
Okay.
The one first is the Kotak Select. And now the Kotak Standard Multi-Cap Growth Regular Plan Fund.
Right.
Second one is HDFC Mid-Cap Opportunity Fund Growth.
Okay.
Third one is the SBI Magnum Mid-Cap Regular Fund Growth.
Mm-hmm.
And the fourth is the Mirai Asset Emerging Blue Chip Regular Plan Growth.
Okay.
Out of this, SBI Magnum is not giving proper this one returns.
Right.
That is always red, but other three are okay, just on the boundary line.
Okay.
So my plan is that I want to increase my wealth.
Okay.
I invested in that regarding that one only.
Okay.
So that after the retirement, whatever the amount I had, 50% I am investing in this.
Okay.
And 15% I am investing in the equities.
Right.
Right.
Okay.
So I have a further planning of up to 1 year to invest in these funds. Whether it is okay or it should discontinue some of it and go in another one.
Yeah.
Or what is your opinion, sir?
Right. Okay, I will toss this question to Harshvardhan, but one point very clearly emerges is you have 2 mid-cap opportunities fund. Obviously, yes. Since SBI Magnum mid-cap is not doing well, Harsh will also agree with me.
That's right.
Yeah.
So, Murali, if you look at the question, he's got about 25,000 invested in 4 funds with a time horizon of 1 year. So, what I'm really concerned as a retired person, he's investing for a 1 year time horizon and all equity funds.
No, then we need to clarify that question. Are you going to, Mr. Prakash, are you going to withdraw after 1 year or you will keep it for longer?
I'm still going to invest whatever the funds which I am having.
Continue to invest.
Because I don't have another income except the pension. The pension is required for my daily use.
Okay. So this will stay invested for long term?
Yeah, I'll be rotating this amount.
Okay.
So if you understand the query correctly, it is that he's investing in equity funds right now, will stay invested for long term and wants to review the portfolio after 1 year maybe.
Correct. Yeah.
Okay. So Mr. Prakash, in that context, the portfolio that you've created has reasonably good amount of diversification. You have a multi-cap, you have 2 mid-caps. That is a bit of a concern, and you have an emerging blue chip fund. So again, that is a large and a mid-cap category fund. So if you're as a retired individual or as any equity investor, it's ideal that you create a portfolio with a core portion being into large and blue chip companies of the country. So around a 50%. So in this case, 50,000 rupees should have gone into large cap companies, and the balance amount you could have split within the mid caps and the emerging equities, or you could put it in a multi cap. So this enables you to have the main portfolio into big and nice companies, and the others will kind of give you that returns push that you're looking at. So out of your portfolio, one is that you can continue with the Kotak Standard Multi-Cap. SBI, you're rightly not convinced with it, so I would suggest you can stop investing into that and add up index fund in your portfolio. So that is a passively managed large cap fund, and you could invest in the IDFC Nifty fund. However, just want to, and rest of the funds you can continue. So just my parting notes with you is that whenever you're investing into any mutual fund portfolio, do not keep a time horizon of 1 year for even review purposes. You need to have at least 2 or 3 years time horizon, because you're investing into good companies. They have good, these schemes that you're investing in are good right now. So give them time. So give 2 or 3 years time before you review your portfolio again. And in case you have a requirement to withdraw money in next 1 or 2 years, then do not invest in equities. Then you should have a portfolio filled with debt or a recurring deposit or fixed deposits in that case.
Right. Let's go to the next query. Kumar Gaurav has mailed this. He is from Bihar. He is investing 1,000 rupees each through SIP in Aditya Birla Sun Life Frontline Equity Fund and ICICI Value Discovery Fund. He has also invested 25,000 through lump sum in Bharat 22 ETF. He wants to create a corpus of 1 crore in 16 years. He wants to know how much more that he has to. I think he has to invest a lot more.
Absolutely. So with just an investment of 2,000 rupees in equities and a lump sum of 25,000 rupees, in 16 years he cannot kind of accumulate 1 crore rupees. So if you are totally looking at an amount, how much should he invest? So if you assume a long-term equity return of about 14 to 15%, he would need to contribute about 15,000 rupees a month.
15,000.
And in case he can do that, I mean, we can also suggest a portfolio for him. So in case, Kumar, you can invest 50,000 rupees a month in addition to the 2 schemes that you have already. So the schemes that you have currently are very good. You can continue with them. You can add 3 more schemes. A total of 5 schemes for an investment of 15,000 is good enough. So I'm recommending those 3 names to you. As and when you increase your investments to 15,000 a month, you can choose these schemes into your portfolio. So as I mentioned, an index fund is one of the categories that you should be looking at parking your money. So IDFC Nifty Fund is one such. HDFC Mid Cap Opportunities Fund in the mid cap space, and an SBI Multi Cap Fund. So as and when you wish to increase your investments, these are the 3 schemes you can add into the existing portfolio that you have.
Right. Very clearly you have to put in at least 15,000 to reach your target over the next 15 to 16 years. The next query is from Rohit Batula from Hyderabad. He is 23 years old and currently investing 2,000 through SIP each in Aditya Birla Sun Life Frontline Equity Fund, Mirae Asset Emerging Businesses Fund, Motilal Oswal Multi-Cap 35 Fund, Principal Emerging Blue Chip Fund, DSP Small Cap Fund, ICICI Prudential, Nifty Next 50 Index Fund, and Canara Robeco Emerging Equities Fund. I am running out of breath. It's a very long list of those things. He is a long-term investor and wants to accumulate 1 crore in 20 years.
Well, again, so this is a case wherein he's investing about 14,000 rupees a month in 7 schemes. So you really clearly do not need that many number of schemes.
Yeah,
so
amount is fine.
Amount is fine. 14,000 is fine. Just that I would suggest he can reduce 2 schemes out of his portfolio. So it becomes a little pruned up, and it does not lead to duplication.
Correct.
So you would have many funds which have duplicate objectives. So what I suggest for you, Rohit, is that you stop your investments into Principal Emerging Blue Chip and DSP BlackRock Small Cap. Switch this amount, these 4,000 rupees that you're investing in these 2 schemes put together. Increase the investments in Birla Frontline Equity Fund and ICICI Pru Nifty Next 50 Index. So these are the schemes that you already have in your portfolio. So you will land up having just 5 schemes for 14,000 rupees. So I think this is a reasonably good amount of number of schemes that you should have in your portfolio. With regards to your target, if you're assuming a 14% kind of a return on equities, you should very comfortably be able to achieve the target of about 1 crore that you have after 20 years.
Right. The next caller is from Jharkhand. Mr. Naresh is on the line. Namaskar Naresh ji, आपका सवाल क्या है?
हाँ, नमस्कार. मेरा सवाल है कि मैं SIP म्यूचुअल फंड में 8,000 महीना में इन्वेस्ट कर रहा हूँ, जिसमें 2,000 पोटेंशियल ICICI में है, HDFC इक्विटी में 3,000 है और HDFC मिड कैप अपॉर्चुनिटी में 3,000 है. मैं इसको बढ़ाना चाहता हूँ, 7 से 8,000 और बढ़ाना चाहता हूँ. तो इसी में इन्वेस्ट करना चाहिए या किसी और में है? मेरा पर्पस 3 से 5 साल तक लॉन्ग टर्म में कैपिटल गेन के लिए है.
अच्छा, आप रिटायर्ड है या अभी भी सर्विस में है?
मैं सर्विस में हूँ.
अच्छा,
मेरा उम्र अभी 50 और 54 है.
हाँ.
अभी 5 से 5 साल और नौकरी है मेरा.
हर्षवर्धन, आपका जवाब.
वेल नरेश जी, आप है ना जो पोर्टफोलियो बनाए हैं वो अच्छा है. आपके पास लार्ज, मल्टी कैप, मिड कैप, ऐसे सब कैटेगरीज के आपने अच्छी तरह बना रखे हैं. अभी आपका ये सवाल है कि अगर आपको इन्वेस्टमेंट बढ़ाना है तो आप किस स्कीम में करें. सो मेरा सुझाव ये रहेगा कि आप लार्ज एंड मल्टी कैप पे फोकस रखें, क्योंकि गोइंग फर्दर हम ये बार बार इस शो पे कहते आ रहे हैं कि आपका जो मेन पोर्टफोलियो होता है, जो मेन कोर पोर्टफोलियो होता है, वो अच्छी ब्लू चिप कंपनीज में होना चाहिए और फिर बाद में आप मिड कैप वगैरह सब और जोड़ सकते हैं. सो गोइंग फर्दर आपका जो भी इन्वेस्टमेंट बढ़ाना है, आपके पास लार्ज कैप एंड मल्टी कैप जो स्कीम्स है उनमें आप अपने पैसे बढ़ा सकते हैं. सो आपके पास ICICI प्रू फोकस ब्लू चिप है जिसपे आप इन्वेस्टमेंट बढ़ा सकते हैं, और HDFC इक्विटी फंड, इन दोनों में आप अपना इन्वेस्टमेंट आधी रात में बढ़ा सकते हैं.
नरेश जी, आपका और सवाल है? क्लैरिफिकेशन हो गया?
नहीं, मेरा सवाल HDFC इक्विटी फंड लार्ज कैप फंड है.
हाँ जी, ये एक्चुअली एक लार्ज एंड मिड कैप कैटेगरी का फंड है जिसमें एलोकेशन आज की तारीख में लार्ज कैप में ज्यादा है।
मैं एचडीएफसी इक्विटी में और आईसीआई प्रूडेंशियल फोकस में हम बढ़ा सकते हैं अपना एसआईपी को, ये अच्छा जगह है ना।
दैट्स राइट।
हाँ जी,
ओके, थैंक यू सर। मैं टीवी के पास नहीं हूँ, मैं अंदर बाहर में ड्यूटी में हूँ, इसलिए मैं नहीं जा सका, ड्यूटी ऐसा था।
ओके,
तो इसके लिए धन्यवाद कि आप हमारा सवाल को आपने लिए, क्योंकि बहुत सारा चाहे मेरा सवाल तो मिलता नहीं, फोन ही नहीं कनेक्ट होता लगता है, आपने लिया इसके लिए बहुत धन्यवाद।
ओके,
तो ये BTVI जो है हमको लगता है नया चैनल हम हमारे एरिया में है, झारखंड जमशेदपुर में। पहले होगा कहीं और, लेकिन यहाँ हम देख रहे नया है, इसलिए मैं अच्छा लग रहा है कि आपका जो तरीका बाकी से अलग है।
Okay, all the best with your investment. Save, invest and prosper, Manish ji. And the next question is from Ashok Bhagwat. He has mailed us this query. He is from Pune. He is retired and wants to invest in mutual funds for savings. He wants your recommendations. उस retired है, savings के लिए मांग रहे हैं.
Absolutely. So Murli, the issue is what, when you're looking at retirement, we usually come across such queries where people tell us that just tell us what is good for investments. That doesn't really work for retirement, because it's a life-changing stage. And, it's a completely different lifestyle. There is a difference in the financial status that you're going to have, the cash flows that you have. So what we recommend is that it's a proper detailed analysis to be done, not just a recommendation as to where do I put my money.
Correct.
So my suggestion for you, Mr. Ashok, would be that you jot down all your needs. What is it exactly that you need per month? What are your goals post-retirement, whether you want to go on a holiday and once in how many years, what is the source of income that you have, whether that is sufficient, keeping in mind inflation over the number of years. So now put all these things in perspective and then draw up a financial plan. So my suggestion is that you should meet a financial planner in person, work out these details, understand the risk profile, what is good for you, what you understand, because you should not park your money into things that you don't understand at this stage, which actually become a reason of worry for you. So if you don't understand equity, the allocation will be very less. If you understand equity and need it in your portfolio, the allocation could be more. So for retirement, particularly for all our viewers, it's important that you put down all those things and work in tandem with whatever your requirements are, rather than working and looking at some individual products.
Absolutely. In fact, let me add to what Harsh has just said. It's very important that you do detailed planning, whether you are retired or you are a college student or you have just joined work. We here at BTVI will try to help you with questions and guide you on the direction. This is not that if you recommend a particular fund, our guest recommends a particular fund, you go and blindly invest there. Consult your financial advisor. These are long-term investments. It's like buying a flat, buying a house that you are going to stay in over the next 15, 20, 30 years. So approach it in a very careful manner. Don't rush into it. There's a long journey. The next question from Srinivas Rajagopalan from Chennai. He is 46 years and currently investing through SIP, 3,000 each in Aditya Birla Sun Life MNC Fund, ICICI Prudential Value Discovery Fund, and 2,000 each in DSP Small Cap and BNP Paribas Mid Cap. He is also invested through lump sum 50,000 in Aditya Birla Sun Life Tax Relief 96 Fund and 1.3 lakhs in Kotak Standard Multi Cap Fund. His investment goal is to create a corpus by the time he retires at the age of 60. Now he is 43 and he is going to retire at 60.
That's right.
So he's got a good long-term view.
Absolutely. So again, a classic case of too many schemes in the portfolio, a classic case of having good schemes in the portfolio.
Right.
So you do have good schemes in your portfolio. There is no harm in it. However, you have two small and mid cap funds, which is really a repetition. It's really not required, considering the amount also that you're investing into each of them. So look at it like this: if you're putting 3,000 rupees in one scheme, and that scheme is holding about 40 to 50 companies, your 3,000 rupees is anyways getting divided into 50 companies. Now you take another portfolio of the same category, so you take a mid and small cap again with a 3,000 rupees. Again, that portfolio has about 50 companies. Now if you pick up both the portfolios, exact holdings of both the portfolios, there will be a lot of repetitions. There will be companies which are forming a part of both three portfolios. So do you really require to do all this bit in the name of diversification? You don't need to. Yeah. So my recommendation for him is that you could stop one of your investments, that is BNP Paribas Mid Cap Fund, and switch that into a scheme that we've been talking about all throughout, that is a Nifty fund. The purpose is that over a period of time we realize, and with India as an economy maturing, the markets maturing, we assume that it will be increasingly difficult for fund managers to beat the index. Okay. So it's it's probably a time where you will need to have
go with the index.
Absolutely.
And IDFC Nifty fund is an ETF or an actively managed one?
No, it is
mirrors
it mirrors the Nifty completely.
Right.
And the good advantage is that if you look at an actively managed fund, the fund management fee will be approximately 2%.
Correct.
In this case, a Nifty fund, because it's a
And it's
passive
an ETF.
fund. No, it's not an ETF, it's a Nifty fund.
Passive fund, okay.
And in that, the fund management fee is about 0.25.
Right.
So you're paying 1/10 of the cost as fund management charges. You're holding the best companies of the country, and so anything that
So you always hold top 50 companies of the country by market cap.
Absolutely.
That's the best way to select and
going further, we are apprehensive given that developed markets, not many fund managers are able to beat the index. So will be the case in India after some time. So if you are with an index fund with a low cost as a fund management fee, that directly translates into higher returns.
Higher returns, correct.
So a Nifty fund will be forming a part of your portfolio instead of the BNP Paribas mid cap. So IDFC Nifty fund is something that you can definitely look at switching your money from this particular mid cap fund.
Right. The next query is interesting. Sunil Shingwani has made us this query from Mumbai. He says he will start with 20,000 SIP for 5 years in an equity fund. He hasn't specified which equity fund, and he wants to know how much will his corpus be after 5 years.
So when you're investing in equities, it is always if the returns are a function of market performance. So in that case, if you look at a long-term return, which is usually 10 years and above, but here a time horizon of 5 years. So even if I look at our same profile of about 14 to 15%, if we are looking at that kind of returns, the corpus that this 20,000 rupees per month will become at this rate will be around 17 lakhs. But you must understand, this is definitely an assumption that we are making. There is no way any guarantee is there in the market that you will get about 14 to 15% returns. It will fluctuate. So the shorter the time horizon that you have, the fluctuations and the volatility will be higher. You could also land up getting 20-25% return, or you could even lose 20-25%.
Correct. And it also depends on the kind of equity fund he is going to choose. Whether it's large cap, multi cap, small cap, we don't know.
So we are assuming that we would be helping him to create a well balanced and diversified portfolio, but in any case, the average return would be around 14 to 15%. And in case you're looking at a shorter time horizon, as I said, it's very important to note that you could actually even lose money in the short term. Equities will function as an SIP, will help you average out over a period of 10 years.
Okay. So very clearly the risk of losing in the short term is there. So be focused on a slightly longer term horizon. Thank you, Harsh, for answering patiently all the questions from our viewers. With that, it's a wrap on this edition of the Mutual Fund Guide. More news and updates coming up on the other side of the break. Stay tuned.